Yeah, see, I'ma keep going, I'ma keep rising. Flipping accounts on God, got cash, I'ma be grinding. These traders be lying, gonna keep buying. Need to be soaring, need to be flying. Trigger be selling, trigger be buying. I'ma keep going, I'ma keep rising. Flipping accounts on God, got cash, I'ma be grinding. Throwing them beats up for that BTS, they got stopped out all over the face. This the blue party and just started yet. Magic car about to catch a case and just move. Every boss gotta take a loss. Every boss gotta take a loss. Every boss gotta take a loss. Gotta take a loss. Gotta take a loss. Every boss gotta take a loss. Every boss gotta take a loss. Every boss gotta take a loss. Gotta take a loss. Gotta take a loss. Yeah, lost about $5 grand. Now I'm worth a couple million. All up in the range, new friends, my ends don't meet till I make it market bend. Hey. Gotta make the market into all my needs again as ATM, I gotta get it. Time to take a loss, yes, it costs, get this bread, yeah, you know I'm with it. I just move space, yeah, you know I got a counter, so you know I got a blue face. Hey. Ice on froze, drip, drop, I flow, no Elias, I guess I'm on a new wave. Porsches, blasting, flip, gymnastics, count so fast, I'm stacked, paid. Hey. I'ma just blast with that chairman rank, all the way through that forest, man. I'ma dip. I see the place, I'ma rip. No FOMO here, don't forget. When the candles hit the line kiss, see I'ma enter off in this buying. I'ma keep rising. Flipping accounts on God, got cash, I'ma be grinding. Throwing them beats up for that BTS, they got stopped out all over the face. This is the blue party and just started yet. Magic car about to catch a case, I'm just every boss gotta take a loss. Every boss gotta take a loss. Every boss gotta take a loss. Gotta take a loss. Gotta take a loss. Every boss gotta take a loss. Every boss gotta take a loss. Every boss gotta take a loss. Gotta take a loss. Gotta take a loss. Every boss gotta take a loss. Every boss gotta take a loss. Every boss gotta take a loss. Gotta take a loss. Gotta take a loss. Every boss gotta take a loss. Every boss gotta take a loss. Every boss gotta take a loss. Gotta take a loss. Gotta take a loss. Yeah, DeLorean Nation. What you know about that 50-50? Signature trade, signature entry, signature exit. We making money. Yeah. And let's go.
Let me see you. Pity, bounce, pity, bounce, pity, bounce, pity. Let me see you. Pity, bounce, pity, bounce, bounce,
Yeah. I got that red, I got that yellow, got that blue. Got that gray, I got that aqua too. NFAs, EMAs, yeah they rule. Off the 50s, how my bankroll grew. Can't no one stop me when I play. AUD bout to rocket, I place a trade. They be losing and hating all in my face. Consistently beating the market, make it easy. Damn, y'all. Use foot to the left, yeah, one time. Pick it up, drop it low, yeah. On the dog. We gotta bounce. That will blow your mind. Your friend is cute. This trade is fun. Move your foot to the left, yeah, one time. Pick it up, drop it low, yeah, on the drum. Watch it bounce, real tight up all that 50 line. Today, the market make it better. Give me mine.
Pity, bounce, pity, yeah, bounce, pity, bounce, pity. Let me see you. Pity, bounce, pity, bounce, pity.
Yes. What's going on, family? What's going on, guys? Welcome.
Let me see you.
Let me put you on game real quick. When the red and yellow split, listen, hope you get this. I won't say it again, I won't repeat it. Gloss has got you heated.
Yes. What's going on, family? What's going on, guys? Welcome to tonight's stream. Super excited to be here with every single one of y'all tonight, family. Go ahead and drop a 3 in the chat if you guys can hear me one time. Go ahead and drop a 3 in the chat, family, if you guys can hear me loud and clear. Perfect. Go ahead and drop those locations, family. Drop those locations in the chat now. Bounce, fitty, bounce. Yes. Drop those locations in the chat, family. Drop those locations in the chat. We are live right now. Let's go ahead and have a phenomenal start to the week. Live here with your boy Abel. You guys know the vibes. Go ahead and drop those locations, family. Let's get it. I seen a milli now, motivated. I got motivated. Seen a milli, I got motivated. Quit my 9 to 5 and now they hating. Used to see all their faces. I had to go make some changes. And now I'm elevated. Expensive dinners, I'm tipping no waiters. I'm sipping champagne with no special occasion. I just took a training from Tyrone and Abel. The team we got base, so now we celebrate. Took a trip to Miami, I'm riding in Forex. Up at 4 in the morning, I'm stretching, I'm young. Catching pips in the morning, you probably was snoring. Every trip with the team, and we lit and we know it.
We be lit and we know it. Got a couple milli, I'll show it. Motivated and grow it. Funding my milli account so it won't blow it. Yeah, all they watch is 2 candles. 100 racks is 2 handfuls. Turning up the fire, no handles. Blessing my old teens, bang, bro.
I seen a milli, I got motivated. Seen a milli, I got motivated. Quit my 9 to 5 and now they hating. Used to see all their faces. I had to go make some changes. And now I'm elevated. I seen a milli, I got motivated. Seen a milli, I got motivated. Quit my 9 to 5 and now they hating. Used to see all their faces. Yes. I had to go make some changes. And now I'm elevated. Yes. What's going on, family? Let me go ahead and turn down the music real quick before you guys get me really turned up in this dang, family. Go ahead and continue to drop those locations in the chat because we are live. We are live one time, family. Let me see what we got in the building today. I see we got the Bahamas, Tammy. We got New York in the building. My guy Wally, what's up? We got Moon in the house. GP Way looks like it will go up soon. I mean, listen, man, we're going to see for sure. Get the bag. We're going to go ahead and take a look at, obviously, a lot of these pairs that you guys want analyzed. You know, give y'all our thoughts and opinions on the week of what we believe can actually happen. But before we get into that, man, let me continue to give these shout outs. We got Bradenton, Florida. We got Texas, upstate New York, 315-518. Shout out to the 518. All of my family back at home. I appreciate y'all. We got Malden, South Carolina, DC, North Carolina in the building, Tampa, Miami, California, Chicago, Sydney, Australia. Watching the full ad so y'all get the extra youth. Man, Gerson, man, you are an absolute superstar. I hope you know that. If nobody told you that you are phenomenal, I'm telling you that you are phenomenal for that. Shout out to you, Gerson. We got Chicago in the building. What is going on? Vermont in the house. Hammond, Montreal, Canada, Atlanta. We got Raleigh, the Chisleys. My guys, my family. What's going on? Shout out to you guys out there in Raleigh. We got Trinidad and Tobago in the house with us tonight as well, family. Super excited to be here with every single one of you guys as usual because it's another day that we're able to come here and ultimately get better, right? That is the overall goal of this, guys, is to come on here, get better overall, look at the setups for the week, and hopefully we can, you know, have a phenomenal week, this up and coming week overall as a whole. You know I'm super excited for this week. I believe that the markets are preparing themselves very, very nicely. I do have a couple setups that I want to go over with you guys as well. It is me and the rest of the team. I believe it's me and my guy Kyle as of right now that is on, but the rest of the team should be jumping on shortly. You know, obviously they had some personal things that they have to deal with for right now, but guess what? Y'all still got the boy, Mr. Abel, the young legend, young lion, Mr. Kyle with us, and you guys are definitely going to get a lot of value tonight as usual. and I'm excited for it, man. But before we even get into anything else, man, my guy Kyle, my brother, how are you feeling in the chat, bro? How you feeling, Kyle? You feeling good, bro? You feeling great? I know you're excited for this up and coming week for sure, like I am. But bro, are you there? Let me make sure that you are there so we can really go ahead and get this thing truly started. So whenever you get a chance, Kyle, definitely let me know that you are in the chat with us, bro. And yeah, for sure. But family, let's see what else we got.
What's good? How y'all feeling? I'm feeling blessed. Bro. I don't know about you. This week is gonna be the start of March, and I don't believe this week is NFP week. I think NFP week is next week. But you know, correct me if I'm mistaken. But this is the start of a new month this week in March. So I'm definitely very excited. I don't know about you guys, but every week, every month, you should be reflecting on how far you've came and how far you're going to go. And I'm very excited. January and February were really two really good months for us here at the Private Society. So I cannot wait to see what March has in store. 2023 is already flying by. So I hope all of you guys are tuning in with us every single session, staying consistent with us, and really following along with the education that we're giving you guys every single week.
Yeah, for sure. I mean, I couldn't have said it better myself, bro. So I definitely appreciate you for being so open and willing to provide that value, my brother. But let's see, we got Savage Land in the building, right? 20 pips, Savage. What's going on, my guy? How are you doing? Right, definitely go ahead and smash the like button, family. The goal for today is 100 likes. Let's go ahead and smash the like button as you guys come in. And if you guys are newer to the stream, then do not hit the like button just yet. Let us earn your like. We want to make sure that the people that are actually liking the streams are liking it because they're actually getting some type of value, right? So if you are new to the sessions, do not like the video just yet. Wait till you guys get some value and then go ahead and show us love, by thanking us with that like button getting smashed, family, right? So let's see, we got Alex in the building. Shout out to my guy Alex. Jackson, what's up to you too as well? Appreciate every single one of you guys. But let's go ahead and get right into this and see what we got, right? Let's see, it's my birthday month, so it's destined. Shout out to Michael. Let's go, man. Happy birthday to you. Early birthday to you, my brother. Let's go ahead and go through the news for this week, family. See what we got to be aware of. And I'll give you guys some thoughts and opinions, man, because it's been very interesting start to the year, right? Especially with everything that we've been dealing with, right? So last year, guys, the last 2 years, the markets have been extremely predictable. We actually had really great years over the past 2 years. But I'm going to be honest, at the start of this year, it's been a little bit different now, right? Because now, obviously, we're talking about, possible shifts in sentiment overall. Data has definitely been changing overall as well, and it definitely makes it a little bit more tougher to try to predict what could happen. But as usual, you guys know me, right? I absolutely love breaking down the news. I love breaking down the fundamentals, love giving you guys my thoughts and opinions on that, and hopefully you guys are learning from this, or you guys are also able to go ahead and contribute your thoughts and opinions as well from the data, right? Because I know I'm very much data driven. I'm not like most of the traders on social media, on YouTube, where everything is just strictly technicals. I'm one of those traders, guys, where I need to understand the fundamentals first before I even look at a technical. Like I have to have some type of sentiment in play. I gotta really understand where smart money's playing before I even try to press the button, right? So that's why these start of the week calls are so powerful, because I like to give you guys my perspective from a fundamental perspective first, and then we can go ahead and get into the technicals, right? Because fundamental, and this is just for me personally, it doesn't have to be for everybody, but for me, guys, right, I really use the technicals simply just for entries, right? Whereas opposed, I use the fundamentals and the sentiment for overall bias, right? So fundamental, sentiment, overall bias. Technicals is for me to simply go ahead and know when to enter the markets overall, right? So that's how I personally do it, and hopefully it does help you guys overall. But let's go ahead and see what we got for the news for this week, guys. So we did have some New Zealand news that actually just dropped not too long ago with retail sales that came out. Now retail sales, guys, is one of those events that is going to be hit or miss on whether we actually see volatility or not. But retail sales is still one of those things that are important, especially when right now a lot of these central banks are trying to do what? Answer this in the chat, family. Like, what is the main goal right now for most of these central banks? For 99% of these central banks, what is the main goal that a lot of these central banks have right now? All right, go ahead. Who knows the answer to that in the chat? Go ahead and drop it in the chat one time. right? And then we're going to explain why retail sales is important as well. Right, let's see. Good evening, Fanny. What's going on, Kim MC? How are you doing? Trader FX. Don't listen to him. Hit that like button. I appreciate that. That's absolutely amazing, right? We got TJ in the building. My guy TJ, what's up, brother? Good to see you. Right, Kawi Page, what's going on? Right, King Suji, exactly. Right, so most of these banks, guys, their main objective right now is to simply control or fight inflation, right? That has been the #1 objective for the past year, and it has not changed because inflation is still very much high. All right, now another question that I have for y'all, because you guys know when I'm hosting the show, I'm very educational, right? The other question that I got for you guys, so if the Fed has that goal of fighting inflation, right, they really have two main objectives, right? What are the two main objectives of the Federal Reserve, or every central bank for that matter? What are the two main objectives for these central banks? And again, it's going to tie into, guys, retail sales. It's going to tie into a lot of these data that we're going to talk about in a few. Right, but what is the main goal for these central banks? They have two main objectives. Who knows the answer for that? Right, it's very simple. Okay, it's price stability. There we go, Michael. Price stability and a tight labor market. Price stability and low unemployment. That is the two objectives, at least for the Federal Reserve. It's the same for most central banks, right? But the Federal Reserve's main focus is truly to have a super tight labor market or low unemployment, but also to have stable prices. There has not been one central bank across the board that has had stable prices, right? A lot of these, and I'm just gonna speak for the Federal Reserve, right? The Fed has had a very strong labor market, a very tight labor market. In fact, unemployment is at record lows. But the one issue that they've had for the past year and a half to 2 years is that issue with inflation, aka not having stable prices, right? And that is a big issue, guys, right? And it's a big issue because if we have inflation, which is at above 6% right now, if inflation's at 6%, but yet wages are not even changing at all, that's a big issue, right? Because that's going to cause a lot of hardship to us consumers, especially the ones that are not prepared for this type of economy. So their objective, guys, is to get back to that 2% level, no matter what it takes. Now, listen to me closely when I say this. No matter what it takes, their goal is to get us back to 2 to 3%. We're still at 6%. So they got some ways to go. Now, granted, inflation has been trending lower, right? We were at 9% a while ago. Now we're at 6%. So we are on the right path, but we're still so far away. It's not even funny, guys. So since we're still so far away, right? Since we're still at 6%, the goal is 2%. That means that the Federal Reserve is very much paying attention to a lot of these news releases right now. They always pay attention to it, but more now than ever, because they have to be able to take all of this data that is coming out and create an idea or create a blueprint, right, as to what they're going to do when it comes to interest rates. Because the one tool that the Federal Reserve has that can help them fight inflation is what? Answer this in the chat. Answer this in the chat, family. What's the one tool that these central banks have that allow them to actually fight inflation? What tool do they have? Right, it's one thing that we've been seeing occur already. Right, one of the tools, guys, is simply dealing with interest rates, manipulating the interest rates. That is the one tool that they have that can absolutely kill demand. Reason why we have inflation as high as it is because over the past 2 years, there's been so much money printing, so much stimulus that everybody was fake rich. And because everybody was fake rich, everybody thought they had more money. So what were they doing? They're spending, spending, and spending, which is why retail sales 2 years ago was through the roof. Because when we have high retail sales in this current environment, that is very, very dangerous, right? And that's why retail sales is an important release overall, because when we see high retail sales in an inflationary market, then that's not going to bring no confidence back into the markets. That's not going to bring no optimism. In fact, that's going to add on to more fear, because that might lead to the central bank actually tightening even more. Oh, man. Are you guys with me? Drop a 3 in the chat, family, if you guys are with me. Again, this is important information you got to have. All right, because when you really understand how this stuff works, when you understand how the Federal Reserve works, then you should understand what's going to happen for the markets. And I'm gonna give you guys some examples of it. All right. So, for an example, when we have interest rates, right, at as high as it is, when we have interest rates at around 4.5 to 4.75% right now, that's where interest rates is at. When we have interest rates going up, that's going to cause people to stop spending money because now the cost of money is increasing. Interest rates is the cost of money, right? Interest rates dictates the cost of money because when the Federal Reserve sets an interest rate, that interest rate gets passed on to all these other institutions. And now since these institutions have occurred a much larger interest rate, guess what? They have to raise interest rates on us as well as consumers. And us as consumers, we're not going to want to spend way more money now. So guess what? We're going to hoard that money. We're going to pocket that money. We're not going to go ahead and buy certain things anymore. We're not going to be spending as much money anymore. And in return, the whole idea is that interest rates goes up, it kills demand, and hopefully that causes inflation to go down. Oh, man. This is that information, family, that could truly take you to the next level when you truly understand the fundamentals of it all. So again, yeah, this retail sales is for the New Zealand dollar, but it's still a similar concept across the board. That's why even though retail sales at times is hit or miss on whether it brings a lot of volatility, it's still kind of important to understand because the Fed and these central banks are also monitoring this stuff to see what they should do in their next round of meetings. Okay? But let's go ahead and continue going through this, family, because I could talk all day about the news, man, because this is something I'm very interested in. And I think my excitement grew when it comes to fundamentals once I truly understood it. Because once I truly understood it, my trading absolutely exploded. Like my trading increased tenfold, all because now I knew how to interpret the data. So it made the markets that much more predictable. Because now when I have a fundamental bias and then my technicals align with that, oh man, I'm taking those trades, no second guessing. No second guessing and just dealing with the outcome. All right, but let's go ahead and finish the news, and then we'll go ahead and get right into the charts for you guys, because I know that's what a lot of you guys really came here for tonight. You guys came here to see exactly what the market's about to do, and I got you guys for sure, right? So let's go ahead and see. So we did have retail sales, guys, came out. You know, these retail sales numbers actually came out lower, all right? Actually came out negative for the New Zealand dollar. Now, this is the next question. And again, I get it, right? I like to ask questions, but this is the next question I got for y'all. If retail sales came out lower in high inflationary environments, is that actually looked at as a good thing right now or a bad thing? Oh man, Wally. Oh man, Wally. You already knew what time it was, huh, Wally? All right. Is retail sales coming out negative a good thing or a bad thing for these current environments that we're in? Because it would be completely different if inflation was under control. But right now, during current market conditions, is negative retail sales numbers a good thing or a positive thing? Yeah. Right? That's a positive thing right now. Okay? Now, again, 3 years ago, before we went through COVID, before we went through crazy spending, before we went through inflation, this would have been a bad thing. Right? This would have been a bad thing right here. Seeing these numbers is not good when we're in normal market conditions, when inflation is actually under control. But since inflation is not under control, this is actually going to be looked at, interpreted as a good thing. Okay? Market conditions really dictate on how these news events are going to be, interpreted. Okay? So that's very interesting, guys. This would be looked at more as a good thing because now we're seeing less spending occurring, which can lower inflation, right? Now, the next thing we had company gross operating profits for the Australian dollar came out very, very high. Going into Monday, guys, we do have a member of the Bank of England going to be speaking. Anytime we have somebody that's in a high political figure speaking, you always just want to be on the side of caution, right? Because you never know what they say, and whatever they say can absolutely influence these markets, right? So we do have that on Monday morning. Actually, in fact, in about 6 hours, we do have a member of the Bank of England speaking, so be mindful of that, guys. But in the morning, we do have at 8:30 core durable good orders that's going to be coming out. We have current accounts for the CAD. We have pending home sales. Again, we have another member of the ECB that's going to be speaking. Always just be mindful of that. We do have some yen data with the retail sales coming out and the industrial production coming. This is actually going to be very interesting to see, especially with the Bank of Japan, guys, which this bank is still very much behind the curve. They're the only central bank that is at negative rates. They have not raised interest rates whatsoever this entire time, right? They have not raised interest rates at all. They're still negative rates. But now there has been talks of potential shifts in that. So looking at this data now for the yen is probably more important now than ever, right? Because depending on how retail sales come out, depending on how industrial productions come out, it could influence what that central bank actually ends up doing. All right, so that's just something to keep in mind. And then we have some more Aussie and New Zealand news, guys, as well to end out Monday. On Tuesday, we have some French CPI and French GDP numbers that could influence the euro. We also have GDP for the Swiss franc. These are pairs that I really don't trade, especially the Swiss franc. But if you do trade the Swiss franc family, please be mindful GDP is coming out, and that could influence those markets. Let's see what else we got here. We have a few more members of the Bank of England going to be speaking as well, guys. So it looks like to start the week, we have a bunch of people of the Bank of England that's going to be speaking, and that's going to influence the pound pairs for sure. So please be mindful of that. It could shake things up a lot. Let's see. We also have on Tuesday, we have GDP coming out for the Canadian dollar. Again, this is a tier 1 data release, so it's going to influence the markets for anybody that's trading the CAD. We also have some consumer confidence coming out for the US dollar. And then to end the day on Tuesday, we have some CPI data for the Aussie. Again, data that is going to shake the absolute craziness of these markets, family, right? CPI is that one event, one of the few that, again, everybody is watching to see how it comes out, because that can influence the decision making for that central bank. So again, the Aussie is going to be super volatile on Tuesday night, so please be mindful of that. We do have a member of the Bank of Japan that's also going to be speaking on Tuesday night, which again, more time like now, it's probably more important to be aware of this stuff now, because again, there could be eventually a shift in their policies. Going into Wednesday, family, let me actually go ahead. I'm going to get rid of all these 2 stars, right? This is going to take me forever to go through this. Let me get rid of these 2 stars and just focus on the 3 stars real quick. All right, there we go. All right, so on Wednesday, we do have PMI data for the euro, PMI data for the pound. We got CPI for the euro. We got PMI data for the dollar, right? So on Wednesday, it's going to be very, very volatile in the mornings, family. Literally start of London session, throughout New York session is going to be very volatile for the euro, the pound, and the dollar. So please be mindful of that, because all of this data is very important. Going into Thursday, we do have CPI data for the euro once again. Again, anytime any CPI data for any central bank, we have to be mindful of, family, because that is absolutely going to shake the markets depending on how it comes out as. We also have the monetary policy meeting for the ECB, which is going to be interesting. Then we have some initial jobless claims for the dollar. And to end out the week, we have more PMI data for both the pound and the dollar, right? So it's going to be a pretty interesting week with a lot of PMI data, some CPI releases as well. So just be mindful of this, guys. And the whole point of us going through this is so that you guys are aware of it, all right? You guys are aware of when volatility or volume is going to enter the market based on the specific news event that's going to be released. So be mindful of that. Prepare yourself, guys. Don't be trading around it if you are new. If you are experienced and you're already in positions, do your thing. But if you are newer to the actual fundamental side of things, or if you're just new to trading, period, avoid trading around these times, guys, because you might not be prepared for the volatility that's going to enter the markets as a whole. But that is our news for the week, family, right? Overall, it's going to be very interesting, man. I got to give a big shout out to my brother Bert. Big shout out for the $20 donation, my brother. I appreciate you. Thank you for supporting the channel. It definitely does mean a lot, my brother. So if you have any pairs, any comments, questions that you have, you already know you get priority, because you have helped this channel out tremendously, and we appreciate you so much for that, Bert. And you always do this, though. It's no surprise, my brother. And I can't wait to go ahead and next year we catch a Ravens game, right? I still will never forget that, bro. But let's go ahead and get right into the actual markets, family. I'm going to give you guys my thoughts and opinions on the dollar as well, because I think we are very, very at interesting levels, you could say. All right, so let's take a quick overall bigger look at this, guys, and see what the heck has been happening. Right, so overall, because of obviously COVID, inflation, spending out the wazoo, we had a very massive run. We most recently started to actually go ahead and correct, and this correction came, the moment that we seen inflation finally start to plateau, right? And now we're starting to see, some type of an increase or pickup in momentum back, you know, to the upside right here on the dollar. Now, what do I think is going to happen from this, guys, right? Because when you look at this, depending on the time frame, right, if you go to lower time frames, you could look at this and say, oh, man, this is a bearish market, right? Depending on the time frame, you can make your own interpretation as to what the trend is. Right now, 4-hour time frame, this looks bearish, right? But when we go to the daily, we go back to the weekly, you know, we start to see like how bullish this thing really is, right? We had a massive run up to the upside. This is a correction. Again, this is how I'm interpreting it, right? We had a massive bullish run. This is a correction. Where did we correct to? Back to previous levels of structure, right? That's all we did. Now, what happened after we came back to structure? Well, we ended up grabbing liquidity, right? We had this little level of support right here, right? We ended up spiking below this support level and seeing a very strong reaction back to the upside. Okay, now what can we expect next in the markets, guys, right? Well, I'm actually very interested to see how we react at current levels that we're at now. You know, because this level that we're at now, guys, is pretty much going to really help me dictate what happens next. All right, because I know we do have a ton of liquidity above these highs right here. So I'm interested to see, you know, I would love to see maybe something like this, right? We actually go ahead and spike above this liquidity, and then we actually start to see the dollar decrease a little bit. Right, I would love, and I'm expecting weaker dollar sometime this week, probably more so the beginning of this week, you know, but I would love to see it after we go ahead and clear these highs, grab all this liquidity that's been built up around this level. All right, so if we are able to go ahead and spike above this level, guys, I'm going to be anticipating the market to go ahead and drop to the downside. Where can we drop to? Probably below this level of liquidity here, right? Probably right back to this level. Right, in fact, this is going to be my blueprint for this week, and it's been my blueprint for a while, right? If you've been on these streams, family, you guys know that my blueprint really has not changed, right? I wanted to see the market break these highs and then go ahead and start to drop back down low. And once we get back down below this 102.5 level, I'm personally going to be expecting continuations to the upside. Now, again, this is just my general thoughts and opinions. I could be completely wrong, but I'm really positive that I'm probably not going to be, because again, I'm keeping the data in mind. I'm keeping the fundamentals in mind. Right now, hey, but what do you mean by that? Well, guess what? The Fed plans to continue to raise rates. Like, that's not a rumor. That is a fact. Right? That is a fact, right? The Fed plans to continue to raise rates, which means they are still very much hawkish. Whenever we have a hawkish Fed, what does that do to the markets? Right? A hawkish Fed leads to a stronger dollar. All right? Hawkish Fed equals stronger dollar. That's just how it works. Right? Because if you are an investor, right? Say you're smart money, all right? You're one of the big institutions. As an institution, do you truly feel comfortable investing into assets like the stock market, various commodities, right? Or you feel comfortable investing into the quote-unquote risk-on assets during a period of time when you know interest rates are going to go up? Probably not, right? Probably not. Smart money is not going to be jumping into the markets when we know for a fact that they are still going to raise rates. Right? There's going to be at least 3 more 25 basis point rate hikes. At least 3 more. Now, obviously, things can change as more data comes out. But as of right now, where we currently stand, there's at least 3 more interest rate hikes that we're going to see. As interest rates go higher, okay, as interest rates go higher, that is still going to cause the dollar to be more attractive than various riskier assets. Now, the moment that we really start to see rumors of a potential shift, then things are going to be different. Right? The moment we start to hear rumors that a pause can happen in the next meeting, that's when we really need to start being careful and cautious, because that's when we can go ahead and start to change our bias and change our sentiment. But as of right now, the rumor is that they're going to raise rates. That's the rumor, right? We want to play the rumors, right? Playing the rumors is the smartest thing. You want to play the rumors. You don't want to try to trade the facts. You want to play the rumors. But the rumor right now is that they're going to raise rates. That's the rumor, that they're going to continue to raise rates. I actually said something last week that was really crazy, all right? I said you want to play the rumors, but not the rumors of a potential rumor. I said this last week and it was kind of crazy, right? Because it blew my mind, right? You want to trade the current rumors, not the rumors of a potential rumor that's coming in the future, right? Because that's dangerous. That's going to have you chasing the markets. So as of right now, the rumor is that they're going to raise rates. That's the rumor, right? Although we know it's almost guaranteed, it's still a rumor, right? Because again, things can change from now until the next interest rate decision. Things can absolutely change, right? So as of right now, the rumor is that they're going to raise rates. So we have to continuously play that, especially when we start to get the technicals to align with that. It just makes the most sense. So again, we want to play the rumors, but not the rumor of a rumor, because that's going to have you chasing the markets overall. So right now, the rumor is that they're going to continue raising rates. So we have to be mindful of that, especially now. If we go back and we look at CPI, right? If we go back to like last week, right? And I'm not going to do that, right? I'm just going to talk about it, right? But if you go back, guys, we're now starting to see, right, CPI itself slow down from how it's dropping. We also came out and we seen PCE, right? PCE price index last week, that actually came out positive, which shows that inflation is still very much here. And the PCE price index is actually the preferred gauge of inflation for the Fed. So since we've seen the preferred measure of inflation for the Federal Reserve come out hotter, which means inflation is still very much here, that is only solidifying the fact that they're going to, again, remain tightening and remain aggressive. So for me, although I do think we can see overall selling off this week, I'm very interested in seeing this thing potentially rebound to the upside. All right, and if it doesn't do that, and if this thing just continues to drop, then I'll be wrong. Then I'm completely wrong. I'll accept it. I'll take whatever losses I take because of that, and I'll go ahead and I'll readjust my bias. But for right now, I'm really still leaning towards this type of play. Right? I would love to see the market come down, and anything below this 102.5, I'm gonna be buying the dollar like crazy, family. Right? So that's what I'm looking at overall. Right now, I want to go ahead. I want to see who's in the chat with us today. Right? So Kyle, bro. What are your thoughts and opinions on this, Kyle? Do you agree? Do you disagree, bro? You know, obviously, we don't always agree here, family, as a team, as a unit. Trust me, I feel like we are the most coolest community in the world because we don't always agree on every single setup. In fact, we have a lot of times disagreements on what we think is going to happen, which leads to great conversations for you guys to hear. Right? So, Kyle, bro, before I even continue, bro, like, what are your thoughts and opinions on the dollar as a whole? Even if you want to take over the screen share, bro, and share your opinions, by all means, do your thing, bro.
Okay. For sure. To be honest, I do have a similar bias as of what we're looking at to start the week. But, in order to, go ahead and see what you're looking at on the bullish side, I need some more data in order to do so. But again, I'm going to go ahead and just share my screen just so you guys can, understand what I'm looking at. So, I do kind of agree with Abel. If you look at like a big time frame perspective, maybe like the monthly or the weekly, yeah, we have been bullish on the dollar for a minute, and that is the trend. But I'm gonna be honest, I like to look at solidified structure, right? So this right here is valid structure, right? We're making higher highs, higher lows, and higher highs, higher lows and whatnot, and now we're making a higher high. I do kind of see that. I agree with that. Now, my thing is that enough to warrant us above this high? And we cannot, I'm gonna say I cannot assume that just yet, right? Because if you do actually zoom out a lot more, let's look at this structure from the start of the dollar. Let's look at this, right? So we have technically a higher low, and we have a higher high, and then we went ahead and broke structure, right? And now we're creating in a bigger wave. This right here, I like to consider this a bigger wave. A lower low, broke structure. We created a higher low right here, and then in turn, we went ahead and created another lower low, a low that was lower than the previous low. So we had one wave down, retracement, wave number 2 down, retracement. Now, if you were to ask me, I cannot, I cannot really see bearishness. I mean, I cannot really see bullishness again, because, I feel like this right here could be that next lower high point to bring us down and make another lower low. That's just the way I'm kind of looking at it. Now, by all means, can we kind of like, create some more bullishness and, fill in some of this? For sure. I do feel like that's something that could happen. Now, something that could also happen is, we can also like come back up and create like a redistribution, or we can create like a distribution schematic. Like, we can pop up, trade up to here, and then we can finally get that wave down, which is possible, but I can't really assume that yet. We don't have enough data in order to prove that. So, this is the thing with trading. Me and Abel could both be right, but at the end of the day, my general bias is, I'm looking for this next swing leg down. So how high, the point that we're at in the market of how high we are, the time to long the dollar is kind of over. Like, if you ask me, I feel like we've been catching these longs for a long time. We've been buying dollar. Like, there was a point last year where literally all you had to do is wake up and sell Euro USD and sell GBP USD, and you would make money. Like, that's how bullish the dollar was. That's how big this wave up was. And, to be honest, if it continues and breaks this structure right here, then, man, I would just keep buying dollar all day. But at the point we're at in the market and how high we're getting to this lower high point, it only makes sense that I start looking short from here. Now, again, like I said, Abel could also be right, and we can break this high and then still get our short idea from like an extreme level. But again, just the positioning that we're at in the market, I'm not going to wait on that. I'm not going to assume for that. I'm going to see that we are in a premium range, and any type of premium shorting opportunity I can see, I'm going to take it. So, we're not really in a premium buying region, to be honest, right? I mean, we're not in discount, if you ask me, to be buying. If you would want to buy again, I'd like to see something more lower than this 50% range, something, deeper than that. So, at the end of the day, I'm looking short dollar. That's my consensus. Like I said, I have two possible scenarios. We can either short from where we're at right here, or come up and fill some of this. And, that's really what I'm leaning towards. Now, on this monthly chart, we have about 2 days left on the monthly candle. So, 2 days left of February, 2 days left on the monthly candle. So, if this monthly candle does close as this engulfing that we're seeing right here, then yeah, for sure, I would actually be leaning more towards it coming up and filling this inefficiency, and then looking for short ideas again. So that means we would have some longing opportunities on the intraday level, like Abel did say. But, like I said, we have 2 days left of this monthly candle. That doesn't mean it's going to close like that. A lot of times with candlesticks, they'll print one way for, majority, 80 to 90% of the time, and then it could actually snap back and close in a different direction. So, we can't really assume anything until we see this monthly candlestick close. But you guys know me, I'm leaning towards the bearish side. There's nothing really so much on the weekly and daily, except this just continued down structure. Now, I do want to show you guys the 4-hour. The 4-hour is what's getting me to still stay on the bearish side, even on the intraday level. I like this candle right here. I had this marked up. I had this marked up for so long. Even on the last week Sunday call, I was waiting on this. So when we got it on Friday, I executed on USD CAD. And, I know some of you guys are still in that trade with me. I'm going to be taking partials maybe once I hit my 3%. If you hit your 3% already, then, it would be a great idea to take a partial. Me personally, I'm not just yet. I'm just holding at my break even. But, to be honest, I'm not really gonna discredit this candle right here. This right here is kind of our extreme level, right? So, if daily structure were to continue, then it would be right there, right? That's our extreme level. If we do go ahead and break this, then Abel's analysis is definitely probably gonna pan out a whole lot more. But still, these areas up here are a big, big, big breaker bounce point. I feel like even if we do go ahead and break this, like I said, that would just be a move that's counter trend for us to go ahead and in turn sell off from there, if you ask me. So, I'm leaning more towards that. If we do get our sell-offs from here, then that's perfect. We can just continue in the direction of the trend and, play the bearish dollar all week. Again, if we do go ahead and break this though, I would be, still bearish dollar, but I wouldn't continue stabbing at bearish dollar all week. I would just understand that we broke structure, and I would understand that we would be coming up to a higher level, and I'll be waiting to, in turn, even though I'm bearish dollar, I wouldn't be playing that direction until we get higher. So, that's my consensus on the dollar. Like I said, it can either continue playing off from where it's at right now, or we're gonna sell a little bit more at higher levels. But I'm leaning more towards the bearish side. So that's kind of I'm not gonna give any bullish setup on it just yet. I'm gonna only lean towards bearish setups for now.
Yeah, and that's fair for sure. And again, this is what I was telling you guys earlier, fam. Like, there's times where we do not overall agree. But the thing is, I believe for at least these intraday opportunities for the course of this week, we have a similar bias overall. I also do think that this is going to drop, but I'm looking for the sell above that level that you're trying to play personally. Like, I want to see that level get ran and then start looking for shorts, if anything, because that's when I think a lot of profit taking is going to happen above that 105.500. So I think that we actually run that, and then we actually go ahead and sell off, so we get below that 102.5 level. All right, so that's where I'm looking at. But overall, you guys know I'm still very much bullish. I have my reasons for it. I'm very much fundamentally driven, and it just doesn't make sense for me personally to continuously looking for those shorts long term. Like, literally makes 0 sense for me overall. But everybody does see it differently, and that's the cool thing about trading, right? Everybody has their own perspectives, their own ideas, their own ideologies, and only time will tell to see what actually ends up happening at the end of the day, right? Like, that's the thing about trading. You got to just take your trades, take your setups, take what makes sense to you, and just make sure you're managing risk correctly, so that in case you are wrong, it doesn't overall hurt your account to a point where you can't even trade moving forward. All right, but let's see what else we got here. But your technicals, why you ignore the news? And again, not everybody really looks at the news neither, right? Keep that in mind, family. Not everybody utilizes the news. Some people just strictly trade technicals. Kyle definitely really just relies on his ability to, mark up technical analysis more than anything. So there's nothing wrong with that neither. You got to do what works best for you at the end of the day. Like, what works best for you? Are you strictly technicals, and has that been working for you for a while? Then yeah, then by all means, just stick with that. And others, like to use fundamentals in their analysis, right? They like to use the data. They like to really think like the institutions and incorporate all the data that comes out. And that's not to say that technicals analysis traders don't think like institutions, because obviously institutions also focus on areas of liquidity, things like that, supply and demand. But in my opinion, all that stuff really is dictated by the data, which is why I rely on the data so much more than anything. right? But again, time will tell to see what ends up happening. But I do believe we are gonna see the sell off. I just think we're gonna see it once we clear that 105.5 level first. Let's see.
That's fair enough, bro. You know, honestly,
does play the news as well.
you know, that could play out. You know, who knows?
Open.
You know, and I hope you guys, you know, take our analysis as, you know, purely education. You know, at the end of the day, you know, everybody on here should be using our analysis and our education to help formulate their own analysis, to help formulate their own ideas, because you know, that's what we're here for, to help you guys learn how to fish for you guys self, so you guys don't have to keep relying on people to bring you fish.
That's a fact. And again, just keep in mind, like, just take everything that we're saying and create a bias for yourself. Like, what side do you agree on, right? Do you think the technicals is gonna hold for bearish? Do you think, like, what is your mind telling you, and stick with that, right? Pick a bias, pick a side, and you know, just ride that out at the end of the day. Right, but yeah, you know, that's our breakdowns for the dollar overall, family. You know, definitely take advantage of that if you guys agree to it. Now, Kyle, do you have any other setups you're looking at, bro? Do you want to go over real quick before I go ahead and give some setups too?
I do want to go ahead and talk about USD CAD real quick. You know, then I might have some you know, and then I want to see what you're looking at, and I'll probably give my analysis on those. But yeah, I'll go ahead and chop it up about USD CAD a bit. You know, if my bias on the dollar is correct, and we are able to sell off from this 4-hour candle, you know, that I marked out for you guys, you know, if that goes ahead and continues, then we will have a nice USD CAD swing trade on our hands. You know, anybody that's in the Profit Society Premium that is inside this trade with me, I want you guys to go ahead and drop a $sign in the chat. Spam a $sign in the chat if you're in the Profit Society Premium and you're in this trade with me. I just want to go ahead and get a roll call real quick. So we caught this sniper entry, I'll say last week Friday. It was really like a 20 pip stop. We're up maybe like 2% on it, but it has a potential of a 1 to 17, 1 to 17, 1 to, nah, that's not it. 1 to 17, 1 to 18 is what I meant. And you know, if we were to start off on the monthly on USD CAD, you know, we're in like a tricky spot. We have liquidity on both sides, right? We have you know, we have liquidity to the upside, and we have liquidity to the downside. So you know, it's kind of like, which one is going to get rated first, right? That's the thing. You know, which one is going to get rated first? Now, if you ask me, you know, this thing has been bullish, but you know, we kind of reached an extreme level up here when we came up to mitigate this candle. So I have to kind of follow order flow. And you know what order flow is showing me that we went ahead and we reacted off of this candle. And then I see that we went ahead and reacted off of the candle that you know, that we reacted off of. It created an engulfing, and then we came back and reacted off of that again. So this is kind of, again, at an extreme level. You know, I'm going to clear this out, delete some of these. So again, we're back at another order flow level, right? You know, once we reacted off here, created an engulfing. We reacted again, created another weekly engulfing. So you know, at this point, it kind of has to react from where it's at right now, or I'm gonna kind of flip to the bullish side, because you know, it needs to hold this structure and hold this order flow, or else then, you know, I will kind of change my bias and, you know, look towards the bullish side, because you know, we want to see order flow followed perfectly, and it has been. You know, order flow has been followed perfectly on this pair a minute. So, you know, if you were to ask me, you know, I need to see the reaction, you know, over the first half of the week. And if not, if we do break this kind of region up here, you know, this higher low point, or you know, this lower high point. I mean, if we break this, then I'm officially probably gonna flip to the bullish side. But for now, I do see this target getting achieved at some point. At some point, I see these imbalances right here getting filled, and you know, whether that's soon or in a couple months from now is really not up to me. It's up to the market. I do just want to see that get filled before we start making bullish moves. But of course, the market doesn't really care about what we want. It can obviously just break structure and then start going bullish again from there. So at the end of the day, guys, you know, we did execute off of this on Friday. Why? Because, you know, I saw this 4-hour candle. That was our last order flow. You know, if you want to know why, I saw this impulsive move down, and I saw how long this sell was taking. So, you know, I was kind of just like, man, you know, it's taking so long that it's kind of choppy and corrective, if you ask me. So when I saw this, I was like, you know, all these moves to the downside were very impulsive, very impulsive. All these moves to the upside were very choppy, very corrective. So once I saw this impulsive move and we left the imbalance right here, you guys see how, you know, how fast this move happened, and we left major imbalances. We left imbalance in here. We left imbalance in here and here, like imbalance everywhere. And then, you know, in order to at least make a move to the upside, you know, this thing was taking forever. This thing was very choppy, very corrective. So, you know, on a scale of just kind of like understanding that, I like to use my ruler and looking at the bars. So, you know what? It took 3 days to move 315 pips to the downside. Actually, if you kind of measure to the low, yeah, I would say about, you know, 3 days to achieve 300 pips. Now, you know, from here, the low to the high, you know, this took about 22 days to move 300 pips. So I like to look at how much days does it take for the market to move in a certain direction. That's how you can gauge momentum, right? Momentum was to the downside, but the momentum to the upside is very sluggish, very slow. So, you know, I decided to take a sell up here at this extreme level. You know, this was the last point that imbalance needed to fill, right? You know, we left inefficiencies everywhere, and this was literally filling every single inefficiency right here. So if the market were to move to the downside, it would have to be from that entry. So that's why we took that on Friday. And at the end of the day, guys, we are floating still. And you know, I would move my stop loss to break even. We already did. So, you know, it would have to continue from here, or again, I would be flipping to the bearish side. But there could be a potential setup very soon on this thing. You know, for you guys that are liking this setup, you know, obviously I'm not going to really call a signal or anything, but if you agree with my analysis on the setup and you agree with the bearish side, then it would be in your best interest to kind of get an entry around the daily open of this candle, right? So I like to enter off the daily openings. So the daily open on this candle would be the 1.36100 level, right? So for re-entries, you guys can look at the 1.36100 level, right? And how that would correlate on a lower time frame, I would say you would be playing like this candle right here, right? So let's say you were to enter, your risk to reward would possibly look something like this, right? and I hate to delete that, but you know, I'm not going to be personally re-entering. I'm already have an entry from the top, and the Profit Society Premium members, I want to see who's dropping a dollar sign. There's a lot of you guys that are in that. So the Profit Society Premium members already have a higher entry, but for you guys that are maybe not premium yet, or just hop on our free sessions, we still love you guys. We still show you guys a lot of love. But at the end of the day, our premium members are going to get the best entries that we can see because they're always getting updates in real time. They're always getting live sessions in real time during New York session, our actual trading time zones, and they're constantly getting like entry zone alerts when we're actually entering and when we're managing our trade, moving stop losses, entering take profits and closing out partials and whatnot. So obviously, they might have got the better entry, but for you guys on here, you guys can probably run something like this, right? Let's say, you agree with this idea and you want to go ahead and catch some of this potential 1 to 7 or 1 to 17 if that's what you decide to hold out for. Because again, I am looking for that final target 1 to 17. For a lot of you guys doing the funded challenges and whatnot, 1 to 8, 1 to 10 is enough for you guys, and I am looking for that. So, maybe if you want the 1 to 17, 1 to 18, regardless, start looking towards this. And I would give you guys this entry. I would give you guys to enter around the 1.36100 level, and maybe run your stop above this 1 hour candle. Would give you another 20 pips. Would give you pretty much the same RR, 20 pip stop loss for a potential like 350 pip trade, right? 20 pip stop loss for potential 350 pips. I don't know about you guys, but I'm taking that risk all day. So if you were agreeing with this, like I said, 1.36100 level would be prime for selling on this thing, with a stop right above this 1 hour candle, and can definitely run us a large move to the downside. But yeah, that's pretty much what I have for USD CAD. I don't really have anything else for now. Maybe until later on this week, I might maybe even look to hedge or something if, the dollar starts giving us some different type of data. Then, maybe I'll start looking in the opposite direction if we break this, because obviously my analysis isn't the end all be all. The market can completely do what it wants to do. And, we very much can break structure. And, when we do so, if we do so, then I will start to interpret the data and look at something different. But, for now, I'm going to continue in what the market is giving me. But yeah, that's what I have on USD CAD.
Nice. Okay. I mean, for the sake of your trade, I do hope it goes in your direction for sure. And for the sake of any of the students that are in it, I do hope that it does play out for sure.
Appreciate that, bro.
I mean, hey, man, listen, I want everybody to eat at the end of the day. I don't have to agree with a setup to want everybody to want to eat and win at the end of the day. More than anything. But yeah, it is what it is. We'll see how that ends up playing out. And hopefully it does play out in everybody's favor that's in the trade. I might see. I don't know if there's any comments for you in the chat. Let's see. As a technical trader myself, in my opinion, price does two things: chase liquidity and fill imbalances. Yeah, I mean, that's a good assumption for sure, or as a technical trader. All right, obviously, my main priority is definitely, I agree with the chasing liquidity 100%. Imbalances, I definitely use imbalances as a way to identify where price can reach towards, but that's more so just playing the liquidity pocket that's probably sitting in between or in those imbalances more than anything, right? So I definitely agree. I'm with the liquidity side for sure. Let's see. Yeah, so I mean, are you done with your analysis, Kyle?
Yeah, bro. You can go ahead and take over and go over your pairs.
All right, perfect. So, I mean, obviously, you guys know what I said for the dollar. I'm not going to really go too much into this again. Obviously, again, I do hope that we do end up dropping from these levels for the sake of the people that are in that trade with Kyle, just for the sake of our community. And if it happens, cool. You know, if it doesn't, it is what it is. But I want to take a look at GBP USD, you know, because my guy Bert did end up wanting that trade or that pair actually analyzed, and I want to be able to give it to him, right? So let's go ahead and take a look at this overall, right? And I want to start off from the bigger pictures as well, like we always do, you know, because it's very important, guys, to always start at the higher time frame. Do those top-down analysis, just so you do get the overall bigger agenda, we could say here. And just looking here on GU, I mean, I'm definitely very much still bearish on this. I mean, this thing been bearish for the past 20 years. This thing is super bearish to the downside, and I don't see it actually changing, you know, especially with what I believe the dollar is going to do overall. You know, I do think long term we could see, you know, continuations, but that doesn't mean that I think it's going to drop right from here. I mean, it very well could. You know, we did get a very interesting weekly closure last week. So I'm definitely going to be looking for the sell side. But if I am being honest, I would like to sell more than anything, guys, probably up above these levels up here. You know, there's going to be a few different areas that I'm going to be keeping my eyes on to start the week, right? We can either come all the way back above these highs and clear this 1.245, or we can just come up here and just fill this wick as well, you know, retest this supply zone that we have right there, and then the market actually going ahead and tank. That would be pretty dope. So that's what I will be looking for. If I am looking for shorts, which again is probably my bias overall, just because that's what the order flow has been, I don't feel comfortable selling from where we're at, personally speaking. We're just too close to this demand zone. I'm not interested in that. What I would be comfortable is selling from up here if we are able to get back up into these levels, right? Somewhere in this little liquidity pocket between 1.22 and 1.24. I think personally that it is a super interesting level. Now, the only thing that really does throw me off about, you know, selling inside of this pocket is the equal highs that we have up here. You know, obviously equal highs, guys, which most traders will consider a double top, right? Most newer traders, or not just most newer traders, but a lot of traders in general will look at this and be like, man, this is a double top, bro. That's super strong, and I get it, right? You know, at times it does happen where it do hold, but for me, you know, the only thing that I'm interested in is, or considering, is what if the market actually wants to run this level first? All right, go ahead and stop everybody else that's trying to trade it from up here, you know, and then from there we go ahead and we truly see this thing move. That is a very big possibility. In fact, you know, this could be more so a distribution just creating itself right now, you know, where we're now just going to be waiting for that UTAD, right? That up thrust after distribution. We get that little sell off after we end up running these highs. And then from there, I will have even more confidence in this thing absolutely tanking to the downside, right? And if I look at levels of liquidity where we could potentially target, I mean, I think this is an area that we could target right here, right? This is an interesting level of liquidity, and we can definitely go ahead and start to anticipate it actually getting ran. None of this to the left really looks strong to me. Like, all of these little higher lows don't really look too interesting to me neither. You know, so I will be targeting all of these levels, right? Again, I am bearish on this pair, so I'm going to be targeting all of this all the way until we get down to these wick fills. But the whole thing is we got to just wait for that entry, right? We're either going to sell off from right here, or we're probably going to go ahead and run the highs and then sell off after we actually clear those highs. Which one am I leaning towards? I really don't know, right? The market has a mind of its own. You know, it's going to do what it really wants to do at the end of the day. You know, what we can do, though, is since we do have two general ideas, all right, you know, just manage your risk in a way that allows you to take both, right? Like, if we do start to see the market react and reject from this level right here, I'm going to go to a 4-hour time frame, right? Like, hypothetically speaking, right, if we were, let me go ahead and delete this, right? If price was to come all the way up here, all right, and we were seeing price structure like this, right, we're now starting to get into that area and we see structure break back to the downside, then at that point, I'll take that trade right there, right, off of this level, right off of here, right, probably closer up to these highs. But I'll be looking for shorts if we see this type of structure being created. Now, if we don't see that structure created, then obviously the market is just going to continue creating these higher highs and these higher lows, all right, something like this. And then we end up running that high, which again, I'm probably leaning towards, because again, more times than not, these equal highs do get ran through just because there is a ton of liquidity just positioned above it, like a ton of money just sitting up there. So even if that does happen, then it's cool, all right? The moment we break it, and the moment we start to see bearish structure form, I'm going to be looking for that potential entry to go ahead and ride this thing back to the downside, right? So that's what I'm leaning towards personally for the pound dollar, Bert. Hopefully it does make sense to you, but that's what I want to see, right? I do want to see a little bit of strength to start the week. Hopefully we can go ahead and start running these highs, and then overall my main bias is definitely going to be looking more so back to the downside. But let's go ahead and continue breaking this down now, right? Is there anything that we could potentially take advantage of to start the week? I mean, let's go lower time from here, right? Again, so I think, and I would love for this thing to actually go ahead and give us a deeper correction. I would love for that for the sake of our bigger bias and just for the sake of us getting a pretty good entry. So is there anything that we could do here to go ahead and take advantage of this? Well, I'm interested to see how we react below this level, right? On these smaller time frames, right? 2 hour, 1 hour time frame. You know, and the reason for that is because we are now testing back into a nice strong level of demand. You know, price could literally come into these levels, fill this liquidity pocket that we have here, right? Like this whole level between, you know, these, like this support and even back all the way to the lows, you know, in here could just be a ton of liquidity, right? This is just a big pocket liquidity in my opinion. Excuse me. So I'm very interested to see how we do react if we are able to go ahead and break these lows, right? On a break of these lows, I'm going to be looking for, you know, reasons to go ahead and buy back up, all right? So there's different patterns that I will be looking for personally. You know, I want to see, again, a run of the lows, and then the market go ahead and give us a nice strong shift in momentum. And then from that standpoint, you know, we can go ahead and potentially look for some longs on an internal break of structure inside of the liquidity pocket. Like I literally would like to see something like this occur, you know, where we create these lower lows, lower highs, lower lows, and then we immediately shift, you know, creating AKA that change of character that a lot of you smart money traders like to call it. I just like to call it very simple, a market structure shift, right? We see a shift in market structure just so it's more simplified. But if we are able to see that market structure shift inside of this area of demand, then yeah, you know, that could lead to a potential bullish move to the upside for sure here down at these levels. And if we do get that, if, keyword here is if, right? The market gonna do what it wants to do, right? But the keyword here is if we get that shift down here in this demand zone, then yeah, I will be targeting easily right back up to these highs, right? Just to show you guys how it could potentially look at the setup itself. You know, the setup could potentially be something like this, where we go ahead and we target back up to these highs. And we're talking about risk to reward is really good too. We're talking about a 5-to-1 risk to reward right here. Based off my rule perimeters, I have to take at least a 2-to-1 or a 3-to-1 risk to reward is the minimum that I would want to see. This is 5-to-1, so it does fit perfectly into my rules. And I think that this could be a very decent potential trade idea, you know, depending on how we react down here at this demand zone. But one thing's for sure, I do want to see this support get taken. Right, I know some of you guys are probably looking at this support right now and saying, man, look at this support, bro. Look how strong it is. We just rejected once, man. The more touches to a support, the stronger that it gets. Y'all really got to throw that terminology and those type of sayings out the window. Right, the more touches to a level does not necessarily make it stronger. That's one of the most commonly said things, but that's also one of the most dangerous things that you could say. Right, the more touches to a level does not make it stronger. The more touches to a level makes it more visible. And when it's more visible, that means it's more easily manipulated. Right? Write that down, family, somewhere. If you are somebody that trades that way, where you say, oh yeah, 3 touches, 2 touches confirms a support, 3 touches validates it, all that good stuff, blah, blah, blah. That's cool and all, but understand, you know, that's literally setting up for manipulation all day long. Right? So again, the more touches to a level does not necessarily make it stronger. Right? It makes it more visible. And when levels are more visible, they are usually more easily manipulated because now institutions, smart money, now they have pretty much a lot of traders trapped, and now they have pools of liquidity on the other side of that support, right? So again, I could be completely wrong, but that's just how I interpret the market, how I look at it, which is why I really do want to see this level at least get ran through. Right now, I'm not going to necessarily just jump into a buy down here. I want to see how the market reacts down here. All right, once we do run the support, I will be looking for reasons to go long, personally speaking. All right, and again, the only reason I want to see, or the only thing I'm going to be looking for, is if we do get a nice strong shift of structure. Price can even come down and even sweep these lows too in the demand zone. Right, that's why I'm going to be patient. You know, we can even come down, sweep this demand zone down here, sweep this low, and still end up seeing the market rebound and then giving us that move to the upside. Right, so that's really what I'm going to be looking for GU. If I was going to be trading GU this week, that's really going to be something I'll be keeping my eye on overall for sure, guys, for GU, right? So, Bert, hopefully this makes sense to you, bro. I know you're the one that really wanted us to analyze this. Hopefully you're still on. And hopefully, it makes a little bit of sense, and, we're able to go ahead and get a bag from this as well. But now that we actually look at that, right, I actually want to go ahead and get right into GJ, right? Because GJ has been pretty much the talk of the town, especially inside of our community. Just because GJ is very interesting, to say the least, and there's just been, different biases on it overall. But when I'm looking at GJ, I'm still very, very much riding with what my bias is overall, what I want to see, which I'm still very much bullish GJ. And everything that we've seen last week, it only really confirmed what I want to see with GJ. Now, again, this is just my opinion. It doesn't have to be anybody else's. I could also be completely wrong. But you guys know one of my favorite patterns. You guys know one of my favorite candlestick patterns, right? Last week, we ended up, and not for the week, but for the day, we ended up closing at a very strong bullish candlestick. More times than not, again, and it doesn't happen 100% of the times, but more times than not, when we get this type of candlestick pattern, guys, where we see, the market itself, end up spiking below previous day's low, grab liquidity, and then immediately turn around and engulf the entire previous day's candle. Man, right? More times than not, I usually see some type of follow through to the upside off of that type of candlestick. Doesn't necessarily mean it's going to happen this time, but that's how I'm playing it, right? I'm definitely looking for more buy opportunities here for GJ to start the week. I would love for GJ to really go ahead and make its way all the way back up to this area of supply up here where we've seen that last massive sell-off. And that's going to be personally what I'm looking for. Again, everything that we seen last week only just confirmed what I have been thinking more than anything. Even from a fundamental standpoint, we did have a lot of interesting news last week as well. With this new person, this new head at the Bank of Japan, the governor or the new governor that's coming in, everything that he said in his press conference just reiterated the fact that they're going to still continue to ease. It honestly does not make sense to, and obviously they have analysts that are getting paid big bucks to, create those biases, but like their whole thought process literally makes no sense over there at the Bank of Japan. Like they want to continue to print, continue to, obviously be less aggressive, not raise interest rates, and they believe that that's going to help them fight inflation. That is super dangerous, right? That is showing more so leading towards like what the U.S. did, a year ago, right? When they were saying that inflation was transitory, where we all know inflation was not transitory, right? So that's the only dangerous part of the whole thing. But the rumor is that they're still going to remain the same stance that they've been holding for the time being. And in fact, they said that they're going to keep this stance all the way until they lower back inflation, which literally makes no freaking sense. But hey, who am I to argue against the Bank of Japan, right? Like that's their words. It's not mine. That's what they're saying. They said they're going to keep their stance until they lower inflation, which makes no freaking sense at all. But what that means to me is that's still very much bullish the pound against the yen, in my opinion, right? So I'm still very much bullish this. Now, if you guys want to look for where I'm going to be looking for potential entries here, because I still am holding, all right? I still have a position open, guys, from this 160 level, right? It's something that I sent out to the community as well, and I'm still holding this position, all right? You guys know I'm going to be holding this position for as long as possible. It's not much, right? I only have about 15% open left of this trade open, right? So it's not a big position overall. But I am holding that position, and I really want to see us, really see much higher pricing, so that's why I'm still going to continue to hold that. Like, I'm literally going to hold this all the way until it hits me out at break even, just because it is such a small position. But what I am looking for this week, guys, for potential re-entries here on GJ is definitely coming back, though, somewhere near these wicks, right? These wicks are very suspect, right? And again, just the different ideology when it comes to interpreting the market. Most traders, and again, I'm faulty for this too, right? I used to do the same exact thing, right? I would look at these wicks and be like, oh man, look at this rejection. Massive rejection, man. There's no way price is going to go back down there. Man, there's no way, right? That's crazy rejection. The more experienced me now realizes that all this wick is making it more visible, right? It's making this area of structure more visible. And because it's more visible, in my opinion now, there's probably a lot of liquidity below it, right? Again, rejections like this, a bunch of touches to a level, it does not necessarily make it stronger. At times, yeah, you'll be able to get some plays off of there, but more times than not, it doesn't mean that it's stronger, right? So even these wicks does not necessarily mean that this support is just gonna hold. It could, but more times than not, it doesn't necessarily mean that. What I do think can happen though is we come down, we fill that wick, and then we go ahead and we start looking for some higher pricing. I'll be targeting back up to this 163,200, and eventually I'll be targeting all the way back up to this 163,700, all the way up here, guys, right? So my setup, and this is something, again, I'm literally going to be watching for tonight in London session, because this literally could happen tonight during London session. Let me just check the news once again. I believe we do have, when is pound news? So we don't got pound news neither till Wednesday, so we don't got nothing to worry about overall tonight. But yeah, if we are able to come down, guys, and fill this entire wick, get down below this level here, right, then that's where I would be, very interested in taking, a stab at the markets for sure, right? Stop loss could be something like this. Now, again, stop loss is going to be a little bit wider. Whenever I play like more so like a pending order, if I'm playing like a buy limit, which would be something like this, my stops are usually going to be a lot wider, right? Just because, again, I'm not going to be awake. And if I'm not awake, then yeah, I'm making sure that my stops are at a position where it makes sense for me. Right now, if I was awake during this happening, then my stops will be probably a little bit closer based on the reactions that we get, right? Like if we actually do see market react, then yeah, I'll probably just play here and see how the market reacts off of that. But yeah, I think overall, this is a very interesting, level for us to potentially look for some opportunities here, especially just seeing what price action structure is doing. I mean, look at this thing, right? We've had, higher highs, higher lows, higher highs, higher lows. We just broke structure back to the upside, so we're now even creating these little internal higher highs, which can now lead to the, external higher highs, right? So, in my opinion, and I keep on saying that, right, because I know other people might have different opinions, it's fine. If I'm wrong, I'm wrong. If I'm right, I'm right. It really doesn't matter to me personally because I manage my risk correctly, right? But I really do think that this will be a super attractive, idea to go ahead and take advantage of for sure here, right? And we're talking about, potential targets of 170 plus pips, and that's just back up to here. Like if I told you guys my real target, like y'all will look at me probably crazy, like a lot of people have been looking at me crazy, right? But my bigger target is not even just up to this supply zone. Like my bigger target, guys, is way back up to the highs, right? So but we're going to take it day by day. We're going to take it, see how the market gives us, and we'll just go ahead and deal with whatever type of outcome the market does end up, showing at the end of the day, right? But I'm still very much bullish this. I'm very interested to see how we play. I want to see this wick get filled, and then after that wick fill, I'll be very comfortable with looking for, some opportunities to go long here on GJ, right? So that's really going to be probably one of my main focuses for this week is definitely going to be this opportunity for sure. All right, so before I get into the next one, let me go ahead and see what you guys are talking about in the chat. And if you guys do have any questions, comments, or concerns, family, definitely go ahead and drop them in the chat, and I'll gladly answer them to the best of my ability, right? Let's see what else we got here. Any tips on the correct, I'm picking the correct range on the small time frames. What's your thoughts on the 15-minute, 5-minute plays, Kyle or Sauce? So yeah, I mean, so especially like I could use, GJ for an example, right? We can go smaller time frame here. We're on a 15-minute time frame. I mean, when I'm looking at this 15-minute time frame, what is the range that we're playing here? All right, we're playing this low, we're playing this high, or like this is the actual range that we're playing this move, right? So when we are, and again, just for my potential bias here on what I'm looking for GJ, if I am looking for a trade, then yeah, it's probably going to be back down near this structure point. Stop loss realistically should be below these lows just to be safe, right? Because the market could actually go ahead and drop a lot further than I would like, right? It could come down into this level, play in this range, and then go ahead and go bullish. But even on the smaller time frames, right, structure is still going to be the same. Identify what your trading range is, identify those areas of supply and demand, and then also identify where potential liquidity is. All right, that's literally how I personally approach the markets from any time frame, right? I always identify what the trend is. I identify my supply and demand zones, then I identify my areas of liquidity, and then I take a trade once that liquidity gets taken out. Okay, that's literally my blueprint. That's literally all I do every single time. Right? Let me repeat that, guys, because it's a very simple 4-step process that I follow every single time. Okay? Identify the trend, identify my supply and demand zones, I identify liquidity, And then once liquidity is taken, then I just look for my candlestick patterns for my entries to go ahead and jump in. It's that simple, right? You don't have to really complicate the markets. Yeah, you can add a lot more advanced things if you really want to, but trading is hard as it is, right? It's probably best to keep things as simple as possible so that you can actually have the confidence in that trade actually playing out. Right, all right, so that's my thoughts and opinions on that for sure, right? Let's see what else we got here. The Able Shuffle question to UTAD. If you think the Bank of Japan inflation situation is worse, look at the Bank of England. Yeah, Bank of England is like, they're still above 10%, which is kind of crazy. All right, the Bank of England is absolutely getting destroyed. Absolutely getting destroyed. All right, which again, just in my opinion, it benefits my idea more than anything. Right, because since the Bank of England is still above 10% inflation, ain't nobody gonna have confidence to invest in equities over there, right? No, it doesn't make sense, right? Why invest into riskier assets, into riskier plays when your inflation is above 10%, right? Like, that's crazy, right? So again, if they're not investing into riskier assets, equities, things like that over there in the UK, they're probably just gonna start, hoarding the pound, or start buying treasuries over there, right? They're gonna go and lean towards the safe haven type of play, right? So everything that you're saying, Eric, and I know Eric, you're probably one of the few that's also with me in terms of like GJ, right? But yeah, everything you're saying, I mean, pretty much just gives me even more confidence in what I'm looking here for pound yen overall, right? Which is kind of crazy. Let's see what else we got here. We got gold. Yeah, I'll take a look at gold. I got you as well. Coach, Google is saying Japan has a GDP of 250%. So they're easing because if they don't, the cost of long-term borrowing is going to fly. That's crazy. GDP ratio. And again, this is something that we also have to understand, guys, in terms of Japan as a whole. All right, like, it's actually known, all right, that, the consumers out there in Japan, like, they already hoard their cash as it is, right? Over here in the US, we have a consumer-driven economy, right? Where we get money and we spend it. We get money and we spend it. Where over there in Japan, they're like the complete opposite, right? They have to force their consumers to try to spend money over there, which is why they keep interest rates so low, which is why they're still very much easy, right? So, the way that the environment or the economies are over there, they are completely different. If Japan was like the US, where it was more consumer driven, where we spend, then you best believe they would have been raising rates like everybody else. But they're not like that. They have to force their residents to try to spend money over there, right? Which is kind of crazy. But that also plays into what that GDP number is and stuff like that. All right, so let's go take a look at gold real quick, and then I'll take a look at NAS. All right, so gold, let's see where we're at for gold. So gold is very interesting, right? Because gold for the longest has always been looked at as a safe haven. But recently, it really hasn't been acting like that, right? Over the past 2 years, gold was more so playing like it was, one of these riskier assets, right? Where, as interest rates went up, gold started to drop, right? In fact, like, if you actually start to look at when these drops started to occur, right, it was really when the central bank started to raise rates, which again, for gold, traditionally, we were always looking at gold as one of those safe havens like the dollar, but it just has not been acting like that whatsoever. So that's just something to keep in mind. But what can we expect for gold moving forward? Right, well, we are seeing a very strong, look at this monthly candle, right? Like, we are seeing a very strong selling pressure here for gold. I personally like the selling pressure. I personally believe we're going to continue to sell off here for gold. I'm very much bearish gold, guys, all the way until we act. I mean, I'm bearish gold all the way to the lows, to be honest with you. All right, I'm bearish gold all the way into the lows. But I do think at the very least, we can come down and retest back down to the 1727 level, 1726. All right, so I'm still very much gold. Like, there's nothing here, right? There's nothing here that's telling me that price is going to stop at these levels. Like, I get we have this level of structure right here that most traders are probably going to be looking at, which we're currently at. Like, yeah, we might see a little bit of a reaction there, maybe give us a pullback. But even if we do pull back, I'm still going to be looking for more continuations. Right now, again, that's not to say, guys, that I'm selling from right here, right? Because I see that we are at an interesting level of structure. But that interesting level of structure is what? It's visible, All right, and since it's visible, it's probably going to be manipulated one way or another, where we start to see the market just play around those levels. All right, so what I would want to see if I am looking to short gold, again, this is only if I'm looking for the shorts. There's going to be a couple levels that I'm going to be paying attention to. All right, definitely back above this 1890 level will be interesting. All right, and again, this is a far ways to go. I don't even know if this could happen this week. But if we do get above this 1890, I best believe I'm going to be looking for opportunities to short again. Now, again, this is macro outlook. This is a bigger picture outlook. All right, but if we do get above this, I'm definitely going to be looking for opportunities to short here on gold. Right? So that's just me and what I would like to do. Now, is there anything here that I'm interested in buying for gold? Not necessarily. Like, I really don't have too much of an interest to try to buy gold just yet. What I would need to see is some type of a shift in structure, right? Because as of right now, technically speaking, we're still creating, lows. We did just break below this level of structure right here, and we created a new low. So maybe if we do see price push back above here and we break this level of structure right here, then I will actually be, then I might consider looking for these longs, right? Then I will consider it. But right now where we're at, I have no intentions on wanting to try to buy gold at these levels. All right, that's what most traders are going to try to do right now. Why? Because they see that we're at a previous level of structure, right? So most traders are going to be trying to chase these lows down here, right? Every time we come back down to the support, they're going to be trying to buy it every day long. Every little candlestick rejection we see, they're going to try to jump in. And granted, you might actually get a good trade. You might actually be able to get a nice entry. But if we're talking about being confident and trying to catch a counter trend move, I'm very, very, very cautious when I'm trying to play counter trend, right? I'm very conservative when I'm looking for the counter trend play, all right? So as a conservative trader, when we're talking about counter trends, all right, if we're going with the trend, I'm very aggressive. Why? Because I have more confidence. The probability is much higher. But for counter trend, I'm gonna need more confidence, right? I want to see something like this. This is what I would like to see for me to really be confident in looking for those buys. I don't care about trying to get that perfect entry down there. Like, I really don't. Why? Because when you're trying to grab that perfect entry, you're probably going to take a ton of losses trying to get that one perfect entry. That's what a lot of traders do. All right, they're like, oh man, let me get this perfect entry. And then they go ahead and get the good entry finally, just so that they can go ahead and start showing it on social media. But yet they took like 10 losses just to get that one perfect entry. All right. That's not me. That used to be me. I don't care about that no more. I don't care about the perfect entry. I want the higher probability entry. All right. That's what I want. I want the entry that's going to give me the highest probability of the market doing one thing or another. So I would really wait for this, especially since it's technically counter trend in my opinion. I would wait for this break back above this structure point of 1820, breaking this level at 1828, give us a break of structure, aka a shift of market structure, or aka a change of character, whatever you want to use, and then I will go ahead and truly start looking for opportunities to buy on a retest back there. Right, so that's what I'm looking for gold if I am going to be looking for a play. But trying to buy down here is just a little bit too risky in my opinion, right? So that's what I'll be looking for gold. Other than that, I'm going to be on the sidelines for gold until we get something like this. Right? All right, so let's go ahead and take a look at NAS. See what we got here for nasty NAS. NAS is also going to be very similar. I am very bearish this as well. Again, this could just be me. Could be by myself. But I am very much bearish NAS as well. Again, as interest rates continue to go up, that's going to continually devalue, these indices. Indices react very, very strongly to the news, to the data, because obviously that's affecting the overall stock market as a whole. For NAS, or at least for NAS, that's going to be obviously affecting the technology sector. The tech space has been absolutely destroyed over the past 6 months. 6 to 12 months, the tech space has been getting absolutely destroyed and hammered. And I believe as interest rates continue to go higher, it's only going to continue to lead to more hammering of the tech sector, right? So a lot of these tech companies, which is pretty much what the NAS is actually made up of, is just a lot of tech companies. It's still, in my opinion, looking very much bearish, right? So I would be looking for more continuation to the downside here, guys, on NAS 100. Now, where could we look for potential plays from? Well, I'm very torn on where I want to look for sells from, right? Because, you know, we could really drop from where we're currently at now, right? Like this little interesting pull, like this isn't too, like I'm not too fond of these little short pullbacks right here, right? Because I really want to see, again, more premium pricing for me to want to short from. But hey, the market could drop right from these levels. You know, again, this is an indice, right? Indices, you know, at times don't need a much deeper pullback for the next big move to happen. So price could realistically start dropping right from right there. What I would like to see, though, is I would prefer to see price go ahead and make its way back higher, right? I would prefer for that to happen, right? Maybe back up to these levels. Okay, so if we do get up to there, then I might be interested in looking for some shorts. But again, I can't count out the fact that this thing might possibly drop right from these levels neither. Right, so that's what I will be looking for NAS. Again, just keep in mind, if you are going to be trading any of these indices, like it's really best to try to stay within session, right? Like trading during New York session, these indices, just because that's when the volatility really does enter the markets. You know, so who knows? Maybe by the morning time for New York session, you know, depending on where we're at, you know, when we wake up, we might be able to, find something. You know, there is a possibility for that. You know, I actually plan on going live tomorrow for New York session as well. You know, so you never know. We might be able to see something. You know, if we're still at this area tomorrow, we might be able to find nothing. If we ended up pushing a little bit higher, that's cool too. You know, because then we might be able to find something also near these, you know, 12,190, 12,200 level for sure. Right, so that's another play there on NAS, guys. I'm still very much bearish on this as well. I'll be bearish until we actually go ahead and we truly violate structure, you know, and then I'll just be expecting more of a deeper pullback until, you know, we end up going back to the bear side, right? So that's my thoughts and opinions on NAS overall as well. All right, so let's see. I'm new to the community. You guys trade NAS, of course. Shout out to you, Cameron, as well. Welcome to the community. We appreciate you. Hassan, there is NAS. Hopefully that does make some type of sense for you. Let's see, more touches to a level makes it stronger equals cap. Yeah, Rob, I'm telling you, right? That's a bar, right? The more touches to a level does not make it stronger like everybody believes. It just makes it more visible, which makes it makes it easier for it to be manipulated as well. All right, so just keep that in mind. What times are best for trading? What indices or pairs? I mean, for the pairs perspective, currencies, like, honestly, for anything, London session and New York session are by far the best sessions to trade, period, no matter what you're trading. New York session, London session, New York session are by far the best periods of time. They're just the most liquid, right? They're the most liquid by far. You know, they're the most volatile, right? This is when most traders and investors are actively placing trades during London session and New York session, right? If you really want to get technical, the most active time of the day is between 8 o'clock, you know, when New York session starts and London session is still going, right? That London session, New York session crossover, you know, between 8 and 10 is usually like the best times to absolutely trade, you know, because that's when both of those sessions are open. But that also means that there's a lot of volatility in the markets. Volatility is a professional trader's best friend. But for beginner traders, volatility is a reason why your emotions goes through the roof. Okay, so it's a double-edged sword depending on your experience. All right, volatility is a great thing if you know what you're doing, but volatility is going to really have you overthinking things if you're more newer trader, you know, and you don't really have too much experience under your belt, right? But by far, no matter what pair you trade, those times is definitely the best. Thank you, Michael, for dropping that, right? So 2, 3 o'clock in the morning, all the way up into 10 a.m., 100%, like, yeah, you know, that's like the best time, but you just got to be prepared for that volatility, right? And so, yeah, that's where we're at for that as well. You know, again, I'm very much bearish this. I want to look for continuation to the downside, and that's what I will be looking for overall if I was going to be trading, you know, NAS, which, again, it is a pair that we do trade. You know, we do trade it frequently. You know, I pretty much stick between any of these indices, US 30, S&P, NAS. Mainly NAS is the one we really focus on a lot more than anything. But yeah, you know, we will be keeping our eye on that for sure. All right, let's see. Big shout out to Rob as well, man. What's going on, my brother? Appreciate you. Shout out to you for tuning in, my brother. Let's get it. I'd love to see you on the call. All right, so let's go ahead and take a look at the rest of the market now, family, as well. I know Kyle's still here. Kyle, if you have anything else, bro, that you also want to look at, I know you said you're only focused on USD CAD, bro, but if you have anything else you want to also speak on, bro, then definitely tell me to shut up and go ahead and do your thing. You know, just throwing that out there, bro. All right. All right, but let's go and take a look at the rest of the market, family. So I was actually interested in Euro AUD. All right, I was interested in Euro AUD as well. All right, because Euro AUD is actually very interesting. All right, now this is very, very interesting to say the least. Why? Because I'm actually interested to see how we react up here at these levels. Right, because now we're actually pushing above these highs. Right, so we can officially say that these highs we're taking. But if we do what I think we can do, right? Because if I'm looking at Euro AUD, guys, I want to go to the bigger picture real quick, right? I'm looking at Euro AUD, man, and I'm just seeing a lot of selling pressure in this market. All right, overall, what did we do last year? You know, we ended up creating these highs right here. We get a solid move to the downside. We had a little bit of a nice correction. Then we ended up coming back down to retest these lows. We ended up spiking below those lows, and then we seen a pretty decent, strong push to the upside. But ever since then, guys, right, and ever since we started this year, you know, we really haven't done much. You know, we ended up just creating a lot of this choppiness. We ended up spiking above these highs, you know, capturing some more liquidity. We also mitigated this previous bullish candlestick right here, right? So now we also mitigated price. And I don't know, I'm definitely leaning towards more so potential sell side volume, you know, sell side potential here for Euro AUD. I was initially looking to see how we play off of this level right here. You know, how we actually react to this zone is going to be very telling. But looking to the left, right, you know, we do have potential, you know, opportunities to short, you know, from this, you know, sell, you know, supply level up here. All right, so I'm going to be very, very patient with this, but I am looking for opportunities to go short. All right, I'm saying that right now. All right, I am looking for opportunities to go short on Euro AUD. You know, we're either going to give us an opportunity to go short in this exact supply zone that we're at right now, right? We want to keep our eye on this supply zone to see how we react. And if this supply zone doesn't hold, all right, then we're probably going to go up to this higher supply zone and then give us that move that I really want to see, right? But I'm definitely leaning towards sell side pressure right here. I just believe these equal lows all the way down at these lows that have been holding since October. Like, this is just so much liquidity below here, in my opinion, right? All these lows, like, there's no real sweep of liquidity. There's no break of structure. It's just straight equal. Like, I really want to target back below these levels. Like, that's really what I want to see here. So I'm definitely on the sell side here for Euro AUD. We just got to be patient now, right? We just got to see how the market reacts up at these levels. Okay, so what I'm going to do, personally speaking, is now that we're in this range, I'm going to start going to smaller time frame, right? 5 minute, you know, 2 minute time frame. And I'm going to allow the range to actually go ahead and create itself, right? Because now that we're up here, now we just got to wait for the range to create itself, right, on these smaller time frames. And if we see a nice strong push to the highs to capture liquidity and immediately shift in structure, I will be looking to short this market all day long. I will be looking to short this all day long. Okay? So you don't think EA is overall bullish? Personally, not right now. I don't think it. All right, I mean, let's look at this again. Like, let's keep it simple, right? I'll even erase everything. All right, watch this. Right, this is what I'm looking at for Euro AUD. Okay, this is what I'm looking at, right? Overall, if we go to higher time frame, maybe, but even if we don't, right? Overall, like, we're just stuck inside of, and now we're talking about weekly time frame, right? We're stuck inside of this range right here, right? Which is very much bearish because we ended up breaking a lot of structure to the left. This entire move is technically just one big correction. All right, this entire move, again, we are on the weekly time frame, right? So this is a very, very big picture, but technically speaking, this entire range is one big correction. Now, if we actually start to zoom in on this correction, what was the most recent thing that we've seen? All right, we've seen the market come and also break this level of structure. All right, we had all of this price create these lows. We pushed back up, created lower high, right? We eventually ended up breaking the lows, creating a new lower low, right? Now, where's our range? Our range is technically this play to this. This is our current trading range. Right now, granted, price does not have to respect it. You're 100% correct, because price doesn't have to respect the damn thing. All right, but overall, swing high to swing low is technically our controlling range right here. So I'm very much bearish because of this controlling range. Okay. Now, when we always look at, now if we start to really identify key areas, all right, again, remember my 4 steps. Identify the trend. In my opinion, we are bearish. Based off structure, we are bearish. The next thing is identify supply and demand. we have identified an area of supply and an area of demand down at these lows, right? So now we have our areas of supply and demand. The next thing is to identify liquidity, right? We had liquidity right here, which the market itself did what? The market ended up running this liquidity right here, all right? Because think about it. We were literally accumulating in this range, guys, for weeks. For about 2-3 months we were in this range. And then the market spikes up, runs liquidity, mitigates previous bullish candlestick, and then we've seen a very strong reaction to the downside. And now we look for sell side liquidity, right? Because we have to be able to identify buy side liquidity, and then we have to be able to identify sell side liquidity, right? Because the market's going to want to capture most of that. In my opinion, of course, again, I could be wrong, but there's also now sell side liquidity. So even if we are going to go long-term bullish, all right, even if we are going to be bullish, I don't think we're going to go before we actually grab this liquidity down here. Right? I don't think we're going to go just yet unless we actually go ahead and we run these lows. Right? So that's why I'm more so leaning towards the bear side for sure. Again, up at these areas where we're seeing now, I think that we could start to see a nice reaction to the downside, right? And again, this is just the way I'm interpreting the markets. Again, it's not like I'm always correct. Nobody's always correct. No trader's 100% accurate. So I could be wrong, but I'm definitely going to be leaning towards that for sure for the time being, right? I would love to see how we react around these levels that we're currently testing. Again, maybe if we do end up running this 1.575 level, and then we react back to the downside, I will be looking for opportunities to short for sure. At the very least, to again come and target, below this 1.525 level. All right, so that's where I'm looking at. I'm very comfortable looking for that. I will have something like this, for you guys that might be wondering. Right? Maybe something like this. And again, I'm going to play it, obviously, as we get up into these levels. I will play it when we get up there. But yeah, something like this could be, an opportunity that I look at for sure. Playing off of this candlestick up here, this last little wick. Stop loss above this last little area of supply that actually really, did give us a nice strong move, and then target right back to the downside. And the reason why this is even more worth the risk, guys, look at the risk reward here, right? If I am right, again, I'm not saying I'm gonna be right. I believe it's a high probability chance that I'm right, but even if I am right, the risk to reward is a 10-to-1. Right, this is a 10-to-1, right? So if I'm risking 1%, I'm making 10% gains, right? I'm literally going 10 times my risk. I'm targeting 10 times my risk. So not only does it make sense for me from a fundamental perspective, it makes sense to me for a technical perspective. The risk to reward also just makes stupid sense, right? So that's why I'm very comfortable going ahead and taking the trade if it does end up giving me the opportunity to actually go ahead and take it. All right, so that's just my bias over here on Euro AUD. Again, I do want to see it. If it happens, if we get up into that level, I'm going to be pushing the button, and then I'll just deal with the outcome. I'll deal with the consequences, right? If I win, I win. If I lose, I lose. That's why, again, we are professional money managers, right? Like, yeah, we're traders technically, but in reality, we're really professional money managers. Like, that's really the pros, the ones that actually make money and do this for a living, like myself. We are professional money managers. That's really what we are. Like, I would say we're professional money managers more than anything, because you have to be able to manage the money in your account correctly if you want to be here long term. All right, so that's very interesting to me. I like that. I think it's very attractive setup as well. And yeah, we'll see how this ends up playing out. Let's see. Euro AUD always pushes up when Dixie is strong, so be careful selling it. Yeah, it's definitely possible, Andy, for sure. All right, it's definitely possible for sure. And just to be fair, again, keep in mind, look what I'm doing. Look what I want to see here for the dollar itself, right? Just so we are clear what my bias is for the dollar. All right, I do want to see the dollar come here and actually run these highs, right, above this 105.600, and then above this 105.600. I would love to start looking for opportunities to go ahead and go short. I think the dollar itself, guys, is at a point where we could start to eventually see some type of a pullback in the market. We have been very bullish for literally this entire month we've been very strong to the upside. So I would like to see some type of a cooling off period before we see the much bigger moonshot to the upside, right? So it is very possible for that to happen. But if we look at if we look at the dollar right now, and if we look at EA, like they're both actually going in the same direction. Or like EA's been bullish, the dollar's been bullish, right? So they actually have been moving pretty much in correlation with each other, at least recently. Again, you could be 100% right, Andy, where they do possibly, not have as strong a correlation, but at least for right now, the correlation is there. They are very strongly going to the upside, at least for right now, right? So, but yeah, that's my opinion. Again, time will tell to see what actually ends up happening with this for sure. Let's see what else we got here. Devin, yeah, shout out to my brother Devin for sure, right? Appreciate you, my brother, for tuning in. Let's see, Fire Saint, thank you, and Kyle. I gotta go. Yeah, Wally, for sure, bro. We'll talk in the chat for sure, in the community as well. It doesn't necessarily have to pull back to the dollar. I think the idea of people expecting it rather than go with the trend, you have high chance of winning. That is very true as well. All right, we don't have to see a pullback. Like, we really do not have to see a pullback. All right, but for me, if I'm bullish the dollar, which I am, I don't have no confidence trying to buy at these levels though. Right, although it doesn't have to pull back. And if it doesn't pull back, I'll probably just stay out the markets for right now for the dollar. Maybe if we see this thing actually go ahead and continue, then that's fine. That'll be cool. I'll just have to wait for some type of a pullback. All right, but you are right. It does not have to pull back at all. But at these levels, I do not feel comfortable trying to buy at these levels. All right. How many people you think looking to sell? That's all I'm saying. No, you're 100% right. Listen, Eric, I agree with you, bro. Like, you are right. Like, this thing doesn't have to pull back because, again, we are getting at that level. And I mean, this is pretty much lining with Kyle's idea, right? Kyle does believe, that we are going to short from these levels, all right? He believes it because, where we're at. He loves playing these levels, and, he done seen these levels play out more times than not. So that's why he has a lot of confidence in taking this short from right there. But you are right, as well. This could be an area that does just build up a ton of liquidity, right? Which is why, for me, I believe we're actually going to run it. Like, again, I could be wrong, though, right? But for me, that's why I believe we're going to end up running that for that same exact reason what you're talking about, right? It's a very visible level of structure, visible level of resistance. And you guys know what I said. The more visible it is, the more manipulated it becomes, okay? It's not the more stronger the level is, the stronger it gets, right? No, that's a myth, right? That's like stuff that we all were taught when we were, beginner traders, right? The stronger the level, the more right? The stronger the reactions or the more touches to a level, the more obvious it is. I'm sticking with that. I mean, to the day that I die now, right? Because I've seen this happen so often now, right? Again, this is 8 years of experience now that I have in these markets. All right, so the more touches does not mean that it's stronger. The more touches makes it more visible, which is why I want to see at least a clear those highs first before, I start to look for something like that. All right, I want to see everybody get stopped. Unfortunately, right? And again, I hate to say it because I know we do have a lot of traders that are already in profit. I mean, either way, Kyle's already up a bag. They're up around 40, 50 pips. So, they should be at break even, right? But for what I believe can happen is I do want to see this get taken out just because I do believe that there is a lot of liquidity up here. All right, I do believe it. So that's why for me, I don't feel comfortable trying to buy at these levels. And I also don't feel comfortable trying to sell from right there neither. I would rather wait, stay out of the markets, let the market do what it has to do. If it does sell from there, cool. It is what it is. Then I'll be preparing myself for the buy down there. If it does run that level, cool. I'm going to be patient and see how we react. See what the follow through is like. If the follow through brings us back below structure, then I'll be selling. If the follow through actually keeps us above structure or we come back above, then I'll just be looking for continuations. Right, so that's how I am, right? Again, I'm very conservative, you could say, guys, when I'm approaching these markets. Because, again, I done seen the market literally do every potential thing. Right, I seen the market react from these levels right here. That's why I'm not comfortable buying from here. But I've also seen these levels get absolutely destroyed, which is why I don't feel comfortable selling from there, right? You guys get what I'm saying? Like, it's more so the experience in me now is what's really keeping me out of the markets at these levels. I'll rather allow the market to do what it does, and then once we figure out what the heck it's trying to do, then I'll be going ahead and take it away. And that's really probably why I'm going to be leaning towards, pairs that are not dollar correlated, right? It's probably why I'm going to be trading, pound yen this week, right? Going to be focusing on pound yen this week, right? That's probably why I'm going to be, also keeping my eyes on euro AUD, euro AUD this week to see how we play up here, right? Because for right now, where the dollar's at, I have no interest in it whatsoever. I'm just gonna let that play out, and then when it comes a little bit more clear to me, then I'll go ahead and I'll make my move on dollar pairs. For right now, I'm definitely not trading dollar pairs at all. Let's see. I'm 100% with you on the bullish overall trend of the Dixie. Short-term sell. I mean, that's what I think can happen, but obviously it is what it is. The market's going to do what it wants. And we say that so often because it is true. We can have the absolute best looking setup. And I need you guys to understand this, family, right? You can have the absolute best looking setup in the world. All your confirmations check off. An A+ setup. And still lose. And still take a L. In fact, it's going to happen to you a bunch of times in the market. It is what it is. All right, I've had amazing looking setups only for them to get stopped out. Why? Because the market is going to do what it wants to do. Right? And that's why for me, I rely so much on the fundamentals. Right? Because the technicals could line up perfectly and you still get destroyed, and it could be because the fundamentals were leaning one way or another. Right? That's why I'm so fundamentally driven. That's why I love really understanding the news, understanding the data. Because at least if I align myself with what the fundamentals is saying, at least what my interpretation of the fundamentals are saying, I at least have an even much higher probability, right? You can have a high probability setup using technicals, but you can have an extremely high probability setup when you're incorporating technicals, sentiment, and fundamentals. When you're incorporating all of them. I mean, one thing that I like to say all the time, guys, right? Again, if your job is to become a professional trader, and as a professional, you have the ability to learn a bunch of different ways to do your job. I think it makes the most sense to learn all of those ways, which is why I took the last 2 years of my life to actually truly understand fundamentals. All right, because as a professional trader, if I know that there's various different ways of interpreting the market from a sentiment or not even, but from like an analysis perspective, then I think it makes more sense to actually understand all of the forms of analysis. Right? That's why I take fundamentals seriously. There's 3 forms of analysis out there. We all know that. Technicals, fundamentals, and sentiment. If you want to have the utmost, the highest probability, you get the highest probability from understanding all the forms of analysis. All of them, not just one form of analysis, right? Again, you can have a high probability on the technicals alone, but I prefer to have a super high, like extremely high probability. And that's what using all the forms of analysis to your advantage. All right, I hope that makes sense how I just broke that down. Right, but yeah, fam, that's what we got for this week. All right, I think it's going to be a very interesting week. We're going to see, obviously, how these markets end up playing out. Time would tell to see, what the dollar ends up doing. You guys already know what I'm leaning towards. Kyle gave you guys already a good analysis as well. That's based off his opinion, his thoughts, and his ideas. And again, I don't ever discredit nobody that has put in years of work, years of analysis. Kyle has done that. Kyle's put in years into this, right? 4 or 5 years of him actually learning and studying this, which is why I can never discredit somebody else's strategy or discredit somebody's way of looking at the markets, because I wouldn't say it's one is better than the other. If he has the years of experience, he has the back testing to prove that he's profitable, which he is, I can't just completely go against it, because the market could potentially actually do what he wants. All I can do is trust my analysis, just like he's trusting his, and all we can both do is manage our money correctly. All right, we trust our own analysis and we manage the money correctly. All right, I hope you guys
like that.
I mean, that's all we could do at the end of the day. All right, trust our analysis and just manage the money in case we are wrong.
Yep, that's a fact. The thing is, also is like, a lot of people don't understand that, like, we could also disagree, and we could both be right, because the market does have, the market is a paradox. It has unlimited different combinations of entries and stop losses, raids, and all these different types of candlesticks and movements. you know, it's a paradox, meaning it's an endless. It's always constantly moving differently and changing. And you know, at the end of the day, that's why, you know, it's sometimes even best to disagree, because if we are taking the same exact setup, pressing the same exact button, you know, we're gonna be right sometimes, and we're gonna make a lot of money. But there'll also be some times where we're all wrong, and you know, that's something that, you know, we have to understand, that we're not trading against each other. We're trading against the institutions, you know, the people that created this market. You know, we're trading against them. You know, we should all be trading and looking out for each other. You know, we're not ever trading against each other. So let's just keep that clear.
Yeah, now that's a fact. But family, you know, that's pretty much what we got for you guys tonight. I do appreciate you guys for jumping on with us. You know, I think it was a really good session. We're 2 hours into this thing. Hopefully you guys were able to gain value. You know, if you guys were able to gain some value, family, go ahead and just drop some threes in the chat so we know. Go ahead and smash the like button on your way out. And for those of you guys that are in our Discord, you know, please, if you guys have any questions, comments, or concerns, by all means, go into Discord and ask them. You know, we do have the public section of the Discord, so if you guys are not a part of the Discord just yet, you know, by all means, go ahead and jump into that Discord. You know, be active. You know, ask questions. You know, we have a lot of phenomenal traders in there, even outside of us on these streams. You know, we have a lot of students that are really good traders. You know, like that guy Eric. You know, Eric's a beast. You know, he's very knowledgeable. You can just tell. You know, we have Wally. You know, another one that's a super beast. You know, we have, we have so many people. You know, we have Cody. You know, another one that we have Devin. Right, we have a lot of traders in there, you know, that will be able to also help you guys and guide you out for sure as well. You know, so definitely go ahead, join the Discord. If you guys want to have more, you know, personal help, more access to us trading live, because all we're doing right now is more of analysis. If you guys want to actually watch us execute trades live in total, in real time, you know, to consider becoming a part of the premium society, you know, a premium member of our community. You know, the premium member, you know, is pretty fire, because we have, you know, 3 live sessions a week, trading sessions, but we also have 5 educational sessions throughout the week. You know, a lot of great value is being provided, right? So if that is somebody that, if you are somebody who wants to take this thing to the next level, join the premium community, you know, and hopefully you're able to go ahead and grow with us together. All right. But besides that, family, you know, we do appreciate y'all. Thank you so much for joining us tonight. And we will talk to you guys all next week. For those of you guys that are only going to be here, for you guys inside of the community, we'll talk to you guys tonight and tomorrow. And I hope you guys have a phenomenal rest of your guys' day. All right, y'all. Have a great one.
Yo, what's good? What's good? We out here. Yeah, man.